Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone is doing well on this post FOMC Thursday. We've got a lot of post FOMC reaction, not just whether or not traders are willing to close today below the previous session low, whether or not we're going to see continuation lower or not, but also a little bit of data. So let's take a quick peek at the economic calendar, and you'll take a look at that Thursday, September 22 list. Pretty quiet. A lot of central bank activity that really is not going to affect the U.S. as much, but we do want to be aware of any surprises out of the Bank of Japan or the Swiss National Bank or the European Central Bank Economic Bulletin, or even the Monetary Policy Committee, which is the sort of the FOMC of the Bank of England. So a lot of other central bank chatter. Probably the most impactful central bank on what happens in the US is the European Central Bank, especially with the impact on the US dollar. But other than that, unemployment claims, we saw the initial reaction, and we seem to be still sitting in a fairly, we'll talk about the range there in a moment. And then also we've got the consumer confidence and leading indicators. Consumer confidence out of Europe, leading indicators out of the US, both are low heat, hot zones, not anticipated to be massive volatility movers. Nonetheless, sitting at the top of the hour, 10 a.m. Eastern, right at the end of the, there we go, right at the end of the clearing period. All right, that's the hot zone that we're dealing with, not a lot. So let's jump into what's going on this morning. Possible minor low. Now remember, again, if you've been following any of my work on minor lows, you know that a minor low is a very simple classic pattern. It's a lower low. Doesn't matter if it's a 1-minute chart or a weekly chart. It's a lower low surrounded by two higher lows. And the key to the pattern being confirmed is that the candle that has the lower low, and you can see here, that's part of the Darvis tool that I use, the Darvis 3.0, the Darvis signals. And there's a little arrow telling me that the minor low is possibly going to set up. And as long as we don't put in a lower low, then we can look at that pattern, especially within the context of a neutral trend. We can look at that pattern as being a catalyst to a potential move higher. So this is the minor low forming. This is a minor low triggering. That's a minor high triggering. That's a minor high triggering, right? So for the pattern to work, it really is a momentum pattern. So we're watching these right now. And if you have Darvis 3.0, the Darvis signals, as I'll also sometimes call it, you'll see that little arrow will appear, and that's what that's all about. So I'm watching that as well. I think the biggest takeaway in the post, here we go, Jackson Hole, CPI, and FOMC is we are still neutral trend on the daily time frame. And again, neutral trend is measured by 8, 13, 21, and then finally the 34 exponential moving average. That's what I will use to have a read on what's going on in terms of the trend. And as long as that trend is neutral, I can think about overbought, oversold. I'm not thinking about not yet. I'm not thinking about shorting the rips. That's on the daily, by the way, right? One of the things that I talk quite a bit about, reminding myself, is that the easiest way to deal with the uncertainty around macroeconomic shifts like we're having right now, the easiest way to deal with any concern about where are we going next is, frankly, free yourself up from your setups and your strategy needing day after day after day follow through. Fresh eyes and an open mind is starting off the day with a flat book. In other words, day trading allows us to not care at all about what's going to happen tomorrow. In fact, the kind of day trading I do, I don't even care what happens afternoon, right? So I can talk about a neutral trend, but that doesn't mean I'm buying on the daily. And by the way, all the folks talking about these dramatically lower lows, the only thing that matters is the setup. How are you managing risk? And how are you managing reward? Remember, gang, targets, the incessant discussion of where a market is going, that's charlatanism, gang. Traders set up, how am I going to manage risk, and where are the points at which I'll scale out during the context of the trade. Keep that in mind. It'll keep you from going down that very slippery slope. With that in mind, let's go ahead and jump into our questions. And in terms of questions, all right, so our trading room and our YouTube channel, got them both up. If you have a question, feel free to type it in. All right, let's get to it. First up is, hey there, Kevin. Uber. Okay. Uber is green trend. Yes. Do I like this for strength heading into earnings in 6 weeks? I think the most important thing about the earnings window is 642. If you don't know what 642 earnings window is, check out countdowntrader.com. In fact, if you go to Google, let me show you all how to find this. If you go to countdowntrader.com, or just go to Google, Countdown Trader, and then look up, I think it's 642 window. Just type in that, Countdown Trader 642 window. Voila. All right, it'll be the first hit on the Google. And what this tells me is if I have a trending market going into earnings, yes, I am interested in buying the dip on the way to earnings. I do not play through earnings. I'd rather play to earnings. Very different approach. Inside 2 weeks to earnings, the traders who are writing premium have a disproportionate advantage to traders who are directional like myself. Directional debits have a far better chance going into earnings than going through earnings. So if it's a double green, I'll buy the dip on the way to that. And I'll usually cut that buy the dip trend following approach off 2 weeks to earnings, Kevin. All right. And just buy the dip in the wave. That's really what we're looking at. Archer Daniel Midland. All right. So Archer Daniel Midland's been a name that we've been in and out of in the mastery quite a bit. Let's open this up and take a look. Now, Archer Daniel Midland is a neat stock to be able to take advantage of the resurgence in some corners of the grains, mostly in corn. And, this is an agribusiness name. With that being said, when we first bought dips, it was really double green or even a very fresh transition to a neutral market. We've actually been managing this one pretty, as I say, close to the vest, optional targets, break-even stops. I won't be going into Archer Daniel Midland again. However, if you still have some of this, it's certainly not taking on a lot of water. Manage it to the first target or the optional that I sent out in the sector secret. So yeah, I'm not going to be playing it any longer, but I will manage what I have in that position. And by the way, Archer Daniel Midland, ADM, has been very good to us in the mastery in terms of playing a trend that isn't necessarily very reliant on what's happening in the broader averages. It's nice to have stocks that just don't care necessarily what's happening in the high concentration weighted sectors or the S&P NASDAQ are down. TMUS. So this is IYT, and IYT has been a bit of a dumpster fire, no? So names that are heavily weighted within the IYT. Let me show you how we do this. This is something called a multi-chart. Makes it really easy to, one, visually scan the stocks that are high concentration weighted in an index or in a sector. I'm an old school trader. Been doing this for a long time. And what that means is a lot of the things that we do have the advantage of or have the tools to do, I'm just used to looking at each chart. I'm used to flipping through a book of charts every Sunday. I'm used to calculating my own indicators. Not that that's something you have to do, but I am very grateful that that's when I came up as a trader, because I'm not wanting to automate my scanning and watch list building process. I do it very manually. Those of you that have adopted this have realized that those trade flags in the multi-chart make life really easy to determine relative outperformance. And by the way, if you're a member in a handful of our simpler rooms, I've made my wave, grab, propulsion, trade flags, Darvis 2.0 available for free in the room drive. So check out the room that you might be a member of right now. Look at the room drive and see if you don't see Raghee's tops 3-panel chart layout. You can import a number of the tools that I make available to the community for free, the trade flags being one of them. If you've got the multi-trend, even better. By the way, going back to Uber, and I'm looking at IYT. I should be looking at IYZ. Sorry. We need to be looking at IYZ for telecommunications. So when I'm looking at this, I'm asking myself, look at IYZ downtrend, right? TMUS, I would say, Billy Parker, if you're looking for a short, you're looking in a great place. VZ, Comcast, T, gosh, look at all the double red, Charter, ATU. Focus on those double reds because that's where the clarity is. It doesn't matter if it's an up or down trend. We want to focus on the trends that are either up or down first, preferably up, then down, and then we'll focus on chop. So there's a lot to like there. Yeah, good stuff. All right, next up is, oh, you know what? Let me give you all that 642 link in both the YouTube. All right, so oops, that's not what I wanted to do. Hang on. Where did y'all go? There we are. How I trade into, not trade earnings. How I trade into earnings. And there's the link. And I will also send this through to the trading room here. There we go. Okay, so moving on to good morning, good morning, good morning. All right, any chance I can do a follow-up video to the light of the bottom in the coming weeks? Oh, yeah. Shaniqua, yeah, I'm happy to. Sure. Absolutely. We can follow up on that. Yeah. And gang, I want to remind everybody, just because I'm not super bearish and just because I'm not calling this a downtrend doesn't mean on the flip side that I'm bullish. Although I will tell you, I am generally speaking more bullish than bearish. That doesn't mean that we can't day trade to the downside. That doesn't mean that we can't find longs in other markets. And it doesn't mean we can't short other markets. It just simply means that I don't have to pin all my analysis and trades on what happens in the S&P, NASDAQ, and Dow next, right? Making that the sum total of our trading world makes it very small and sad. What we're doing, I'll tell you two of our most recent trades. We're short the euro, whether that be 6E or FXE. You know what's cool about this? It's a bet on, sure, a little bit of strength in the dollar, but it's also a bet on the ECB, then the European economy, and the euro, and that's been working fantastically well, right? So there are better trends out there. So if I'm looking for a short, that aforementioned TMUS grouping of the IYZ, telecommunications, look at XLC, the communications. There are downtrends in this market. We don't have to force an SPY trade or a QQQ trade, right? And the other thing that we've been doing is kind of plucking some Archer Daniel Midland and actually plucking little moves in natural gas to the upside. So it doesn't have to be about the indices, right? And I think a lot of traders somehow feel that if they're not trading the NASDAQ or the S&P, they're missing out on the bigger moves. And my comment is the last two trades that we've sent out in the mastery, FXE and Archer Daniel Midland, are doing pretty well. We don't need to care about what happens in the S&P next. So Shaniqua, it's not only right, what is my opinion about the S&P? It's also, as I've been talking about in the day trading videos that I've been sharing as well, if that whole, are we going to go to June lows? Are we going to go to COVID lows? Is this the beginning of a bigger move to the downside? Let me say what I said before. Anytime a trader wants to talk about targets and doesn't talk about where they're getting in and how they're managing risk, they're just taking you for a ride, right? That's charlatanism, period. Turn on the television, you can get an eye full of that. Targets are not trades. Targets with risk management, right? That's a trade. Throw an entry in there, at least we have a good idea of the movement. Remember that if at some point the markets continue to head lower, great. And I think I was telling my Sector Secrets Mastery folks, a lot of this move here had folks thinking it was the beginning of the end, right? And then we did this. Do you think most traders can sit through? I know I can't sit through a nearly 800 point move in the S&P futures. It was about 3,600 to 4,400. So call it 700. Let's be a little on the lower side. You think most traders will sit through a 700 point bounce in the S&P? That's not realistic. But there still will be traders out there saying we're going to make lower lows, not talking about the journey price will take to that target. The journey is to trade, gang. So be really aware of that. I hope that helps, Shaniqua, and I will definitely circle back to that. I think that's a great conversation. Thank you so much. Hey there, Nick. Good morning. Are pro traders trading accounts typically part of an incorporated business with the trader being the sole proprietor? Okay, two things, Nick. One, I am not qualified to give any kind of advice like that, but I'll tell you what I do. And two, I never use the word pro because full-time or and part-time trading is fine vernacular, but pro means something completely different in trading. Once you're a quote unquote pro, brokers and the CME and everyone looks at you different. You've got a different exchange fee and so forth. So I don't want to throw the word pro in there. I don't consider myself a pro trader. I'm not a professional because that's a completely different designation in our world. But I know what you mean, right? Full-time traders. I use a company called Anderson. Those folks are 2 feet smarter when it comes to entity creation, asset protection, and optimization of our business of trading than I will ever be. I read up, I watch their webinars, and we've done quite a few webinars with Toby from over at Anderson Advisors over the years. I think since 2017 when I first introduced our Simpler community to Anderson, because I've been with them and learning from them for darn near 20 years. And they take care of all of that. So I'm not going to comment on the rest of it. The simple answer is not quite, but you're along the right path. But yes, so do I trade through an entity? Personally, yes, I do. Look, if these are high, look, that's a great problem to have, Nick. These are first world problems. When you are trading through an entity, the whole point of it is I need an offset for the trading income, because those of you that know what taxes on trading income are like, yeah, this is a first world problem, but it's, knock on wood, been a first world problem that I've had for a very long time. And there are smarter ways, again, my experience, not advice, there are smarter ways to construct your trading life than trying to be labeled a trader, right? It's smarter to go through an entity, in my opinion. All right, next up, what is my favorite trade right now? And Durham, the ones that I send out to my members, we are looking at Long Natty. We've been in and out of Archer Daniel Midland, I think twice now. And probably my favorite trade is one that we hit the first target on yesterday, which was an aggro entry on the euro. So none of my trades are predicated on guessing where the S&P goes next. Not at all. Probably my favorite trade, and Durham Mom, to go back to your question, my favorite trade is actually my favorite trading style. Those of you that are with me in the futures room or the Sector Secrets Mastery room, we've been day trading, as I've been saying, our faces off since mid-June. You know what day trading means? I like to say a day trader's best friend is tomorrow, because if we don't see anything today, there's always tomorrow. And a flat book, meaning no position, means fresh eyes and an open mind. Do I care if the market's going up or down? Do I care that a bunch of fear mongers are calling for, brand new lows? Or do I care what Powell is going to do next? Or do I care if we make a brand new high? We don't have to care at all. So if you want that wonderful, blissful sort of apathy, day trade, right? And we've been not only day trading every day, but we're only day trading for an hour. And I don't mean that to come off as just day trade for an hour and all your problems are solved. No. It's just saying that that's the most effective time. What I'm saying is there's only really, for me, about 1 hour and 5 minutes that's been really very much where our most productive day trading is happening. And that's been from 9:30 to 10:35. And so that's what I've been doing, right? We're sort of playing defense with shorter term time frames. So I hope that makes sense. All right, gang, as always, Jim in the free trading room, I will dig that link up, or Lorna will dig that link up for you. But I will tell you this, Jim, if you go to YouTube and Google Anderson Advisor, you'll get a lot of content, and I'm a huge fan. And then we have some of them. We have 2 or 3, I think, playbacks here for simpler. I'll see if I can dig them up. It's been a little bit. I need to bring Toby back. And I think Lorna probably pushed it through. So check that out. Check that out. All right, gang. I will see you tomorrow. Same time, same station. My Sector Secrets Mastery folks and my futures folks. I'll see you in the room. We'll do some day trading. I'll see you in a bit. Be good to each other, gang. I'll see you tomorrow for our next charts and coffee.